Hello, folks. My name is Eric Wilkinson. I'm with Pro Trader Strategy. We're an educational company. So what we're going to do is talk about the markets. We're also going to talk about the strategies I'm implementing into my portfolio based on those assumptions. And for you folks, what we're doing is streamlining that process for you to find the optimal option strategy for any given assumption. What we're doing is trying to educate you folks on how to spot when we should be buying options and when we should be selling options. And I show you how to do that in my webinars that I do on Thursdays, so please check those out. Also, throughout this webinar or video, comment over there on the side. We are an educational company. Throughout this video, if you're commenting over there, I'm going to make sure I'm reaching out to you and making sure you're clear of concept. And finally, smash that like button. It really does help us out before you go. And let's get on with it. The economic data across the pond, the only thing we really got was the German preliminary CPI coming in at 0.4%. That was in line with expectation. Spanish flash CPI, consumer price index, in line with expectations there as well. M4 money supply, a little bit hotter than expected out of Great Britain. Remember, that's the basically the circulation of currency, and that's ramping that up there a little bit. Here in the United States, we also had Barkin speaking, and then finally our CB consumer confidence a little bit higher than expected at 127, expected to be 118, so good to see there. And that's about it for the data. Crude oil making a bit of a comeback here. I thought we were finally starting to see this top here in crude oil. I don't think the downside is really out of the books yet. I think that yesterday's massive candle here that we're looking at over in crude oil. Let me see if I can, share. Sorry, I had it all set up and then I messed it up. There we go. Crude oil yesterday, after making a bit of a top, that big, huge engulfing pattern, that's a dark cloud over any type of strategy, especially at the top of a move. You see that type of weakness. Today, we're getting a little bit of a bounce, but I think it's going to look like more of a dead cat bounce here, folks. I think the market is looking to roll over and test around the 50-day simple moving average there. The break out of that 70 handle is really what I'm looking for here. I think we're going to correct and test that 69 handle there in crude oil. And then we got the bonds. Unchanged for the most part. I've talked about this, you guys. We might as well take that chart off for a little while. I don't think we're going to go anywhere. Only thing that's really going to get that market moving around is the fact that the FOMC or one of these Fed governors starts talking about slowing down on asset purchases. But I don't think we're going to really see that. Maybe a one-off guy here or there. But for the most part, I think they're going to have a pretty solid, consistent, transparent statement that they're going to start cutting back on asset purchases, which is what's holding the bonds up. That means they're buying bonds, and that would allow interest rates to start rising. Because remember, when we're talking about bonds, interest rates and the price of bond are inversely related. All right, Bitcoin making a move here. Now, it's probably because everybody is talking about Bitcoin, and we talked about it yesterday with Binance, and they couldn't get passed through the FCA, which is the Financial Conduct Authority out of London. That is our SEC in a sense over there. Well, they did not get an approval for an exchange. That isn't going to necessarily hurt their adoption, folks, because people can still use their app out of the Grand Cayman Islands through London. So it's not really a major knock, but it does give a little bit of uncertainty to the validity of cryptocurrencies with them doing that is really, I guess, where I'm trying to go with that. All right, VIX moving higher. Again, another mixed bag. NASDAQ in negative territory, albeit only slightly. Something we're going to keep an eye on here is we've been getting these topping patterns, and I talk about this often. When you don't get a real correction to break down, this is still we haven't even rolled over, I guess. It's still, even though you see these little bumps in the road, those are not corrections at all. This is one move. And I think that it's getting a little bit tired and looking for this to roll over here. Now, I have negative deltas already, so I haven't added any with the indices. So I'm leaving that go as we are. But I did add a couple of trades in here, and we'll talk about it in a minute. Dow Jones Industrial Average, all of these pretty much toggling on unchanged for the most part, getting a bit of a rest. But I think that the end of the day is going to be very important on how these charts look like in this setups. E-mini S&P's inventory is very bullish overnight and no real attempt at this point to flush those guys out. So that leads me to upside potential here with the equities, especially in the E-mini S&P's, at least as of right now. That candle for the 15-minute chart was looking a little bit bearish, so we'll keep an eye on that. All right, let's talk about the trades that I've done. GDX, all right, so this is the gold miners index, folks, and it's basically an ETF of all the major gold miners. Some of the smaller gold miners is in GDXJ. That's the junior gold miners. But I wanted to get involved in this one based on the setup. Now, earlier this morning, it was looking even a little bit better when we were down towards the bottom, because that candle towards that bottom looked like a nice little spinning top doji at the bottom there, which is something we're going to look at. And it came right down to this value area low, which is going to start acting as support. You know, those are targets when we get overextended here, where we think they're going to kind of get overextended. But this value area means that the most time and volume has been spent up in this area here. That's where we have found value. Anywhere over down in this area here or this area up here is where, you know, value, it's undervalued down here and overvalued up here. So when I'm testing on this level here, that is a pretty good strike location for a bullish move. And the way the market's starting to set up here, I think that it's a good opportunity to take advantage of it, despite the fact that the rest of like GLD is not necessarily giving that nice of a setup there. It does look like it's kind of a bottom, but because we've gapped out a little bit and just below that Fibonacci, it's not quite as nice a setup as what we're looking at in GDX. And so I decided to play this to the upside. And let me get back to GDX for you so we can take a look at that chart. GDX. So with this, like I said, it got extended to the downside, something to note that we always look at when we're trying to determine our option strategy. With this, I have found that it has found a bit of a bottom here, or at least I believe that. And I think we're going to move back up to the point of control here in the market. So if I think that we're going to move back up here to the point of control and maybe even test this 50-day simple moving average, that's what I'm looking for my strike location in this case. So I have low implied volatility. I have a bullish market assumption. All right. So if I have low volatility, that means I'm leaning towards buying these assets, right? Because when volatility is really low, I know that these assets are cheap, or these option prices are really cheap. So that means I'm going to be leaning towards buying options. Well, in this case, I fell on the September longer duration. I want to limit that theta decay, low volatility. I'm leaning towards buying the September 35 calls. That's right around that 35 delta that I'm talking about. It's not just because it's the 35 strike, it's the 35 delta. And that's what I look for in these types of setups. All that worked out. 35 strike is right there at the point of control. And I paid $1.26 for that. All right. So my break even is up at 36.26, a little bit higher than that point of control. But if I can get this move happen relatively quickly without any theta decay, maybe even a little spike in volatility, it looks like it's on the up in volatility expansion. If volatility goes up, that means my premiums go up. That helps me out as well. So trying to get all of these levers and pulleys in my favor. And that's what we talk about in these webinars, how you can set these up. You go through a simple process in order to spot the right strategy for these. And then, so play that to the upside. We'll see how that works out. I think we'll get a little bit of a bounce here in gold, which will help bring up the gold miners. And then booking. Now, we broke below this Fibonacci yesterday. So some people might say that this is looking a little bit bearish. But if I go over to one of my other charts, and this is really, I was looking at a different chart setup here. And with that, it looked like it bounced off of the Fibonacci. Now, this Fibonacci was set up based on a different high, and we pierced that high there. But note that this Fibonacci has acted as a nice little support area, and that's why I threw that line in there, because that lined up quite nicely with my other Fibonacci. Having said that, you can look at this chart, see that that looks like a pretty nice bottom. We've also got this candle. These are those candles I love to look for when I'm looking for a reversal in momentum. You know, comment over there on the side. I'd love to hear from you guys. What do you guys look for when you think the market's getting ready to switch up? Gravity says, hi, which is the best indicator to trade? For me, Gravity, I like to trade around the points of control, this side area, this volume profile. Why? Because you can see where people have accepted value. And when people accept value, that's where the markets have a tendency to kind of calm down. And when you get overextended to the upside here or overextended to the downside here, that's where it's gotten a little overdone. So these are some of the things that I like to look at. This market profile on the side, we used to call it the Stoudemire on the floor. That is one of the things I really like to look at. You can see, again, this lines up with this little lull in the market profile. Sometimes we could see some volume build out there, but usually what we'll see is that after we've gotten this bounce that we're starting to move. I do have a little bit of overhead resistance on me, I'm not going to lie, but I think that that point of control, which is something I usually like to call as a magnet, especially when they're both lined up, because that's where, like I said, the price has been accepted. And think about your trades when you guys are trading out there. If the price is right there where you bought or sold this underlying, you really have no angst to get in or out anymore, right? Because it's right there where you found value before. So everything has you have a tendency to be a little bit more calm. Now think about it when it's really rallying, making new all-time highs. You have a bit of angst because you're always concerned about trying to cover this. Now I show you how to try and be mechanical in your trading or with your portfolio with these videos, doing covered calls and stuff like that when you think that there might be a little bit of a top. But at the end of the day, what we're trying to do is stay mechanical throughout all of these. And some of them don't always work out. And I'm going to talk about those in these market commentaries. But when they do, we'll use those as examples as well. And that's about it, folks. Unless you guys have some charts you want me to look at or anything else. Other than that, I am pretty much through all of this. Like I said, booking. Oh, I forgot to mention what I did in booking. I went into the September. Again, we have relatively low implied volatility, right? That means I am looking to buy assets or buy something when I can see that volatility is really low. That means that the pricing in the options chain is really low as well. So I'm leaning towards buying. I've got a bullish assumption. I added some calls with this and went into the September, and I did a really small, bought the 2,300 calls for $74.40. So a teeny on that one for this type of move. All right, and that's about it. Other than, I hope you guys check out our webinars where we are going through this series where we are looking for swing trade setups just like this. And then we're going to go through this process of looking through the options, looking at this underlying and determining easily, quickly how to spot the right strategy for any given assumption. As a matter of fact, I even have a chart setup thing that you can take advantage of. So please reach out to us at protraderstrategies.com. That's it. That's all I got for you guys. Again, like I said, if you have any comments, anything else, I will be circling back around for you folks to make sure everybody's clear of concept. Also, if you want to get notified when we're doing these webinars and or daily market commentaries, please subscribe. And finally, either smash that or take that. It's the trudge back. Bye for now. Take care.